This is the standard. This is the work. This is the mindset behind the results. Built, not bought, earned, not given. This is the room where leaders are different. Built through consistency, proven through execution. Hosted by Michael Sweigert. Inside the champion's herd. At ALCOVA Mortgage.
Welcome to Inside the Champion Circle, powered by ALCOVA Mortgage. Your host, Michael Sweigert, sits down with top producers, industry leaders, and some of the most well-known mortgage influencers in the world, and engages them in high-level conversations on what it takes to be elite in the mortgage industry. ALCOVA Mortgage, Equal Housing Lender, NMLS ID 40508. Michael Sweigert, NMLS ID 1240868. NMLSconsumeraccess.org. Terms and conditions apply. All loans subject to credit approval. Grab a drink, put your headphones on, and enjoy this week's guest, Russell Smith.
Well, Russ, I appreciate you joining today. The VA guru, the VA, the man that, well, you said it, I say it all the time. The VA loan, I'll go ahead and, is it one of the best loans out there? Or what do you see?
The best loan in America.
In America. Which I feel like that could be a good t-shirt, by the way.
Good point. And it's, too many people think just a no down payment loan, good rate, it's so much more than that.
Yeah, and there's so many stigmas about a VA loan. So much to the point that, like, I've taken a class accreditation. It's almost like a networking group of loan officers that we call ourselves veteran mortgage advisors. So there's a couple hundred of us, and it's like you take this course and you have to pass the test at the end, and it's all just going over in depth the handbook and also some of the biggest myths that are out there. And some of the biggest myths about VA loans come from lenders. They come from us. It's one thing I always say, that the VA loan absolutely is the best mortgage out there. The problem is that there's a lot of bad loan officers and banks that do not understand them, that completely mess them up.
Right. Whenever I talk to someone, especially a first-time buyer, first-time use VA, and even sometimes if I'm gathering by their questions, then maybe they are not as experienced, I'll ask them, do you mind if I just go ahead, and I like to get common misconceptions out of the way, because of whether it's your friend, a realtor, a lender, believe it or not, you're going to hear some stuff that's just not right. And so, and they always say, sure, absolutely. And so I go through, a few steps on that. And usually there's one they're, oh yeah, I've heard that. And it's not true. Because I've seen it where it wasn't me, thank goodness, but another loan officer. I think he did a good job. But I can see this happening a whole lot. I mean, I have had some where I take it over a loan, especially like call center lender or something, where they just don't go over anything. Here's numbers. Guy said, I can bring nothing to close it. Maybe $1,000, maybe $1,000. And right there on forms and everything, and they said, look, it says you're bringing $7,000. I told you I don't have that. And no seller pay cost or anything. And so what do you do? But he found out right before closing because no one ever explained it to him. Yeah. And I've had one where it was explained. And this was a loan officer that I worked with. And right at the end, even though it was all said and disclosed and signed, no, VA loans, you do not bring money to closing. And I had to be brought into this meeting and everything. And it was, he said, well, I'm sorry. He eventually said, okay, well, that's the rule, but that's not the way it's supposed to be for mine. I'm not bringing any money. And it was bad. It was real bad.
Well, of course, because, you hear no money down, right? And that is because, and it's no doubt. I hate how they say this. Like, I hate how everybody advertises VA loans as there's no down payment. There absolutely is a down payment. They served our country. That is their down payment. Right? And most veterans, when you say, they're like, oh, no, come on. I'm like, no, guess what I didn't do? I was not in the military. So therefore, your down payment was your commitment to this country and, your service. And whether you were deployed or not, it still doesn't matter. You chose to defend this country, and that is their down payment. So the one big stigma, I feel like, and it might go into the myths that we'll talk about, is that VA veteran borrowers, so a VA loan, because there is no down payment, that they're a worse borrower, that it's going to be hard to close, that it's probably not going to be, it's going to take so long because one of my favorite, we had to send it down to the VA. You know how many lenders say that? It's my favorite thing to say. Like, guess what? You don't send anything down to VA. If you get a VA underwriter on the phone, they're going to literally give you 4,000 reasons why you need to tell your underwriter to approve this loan. I mean, it's in the handbook.
Yeah, there's only very, very few instances you got to send a file to VA at the end, and usually it's when, you know, their certificate of eligibility says that that person is not competent to be able to handle things on their own, so VA wants to check behind just to make sure no one's taking advantage of them. So that's cool. It takes a little extra time, but that's good.
Yeah, and I think that the one thing that the VA has done a really good job is over the years changing the loan program to making it more favorable and more in line with other government loans and, quite honestly, conventional lending, right? When you look at a Fannie or Freddie loan, one of my favorite facts, though, whenever people throw out, especially real estate agents, and I get it, you know, if you've been in the industry for 20, 30 years, like I just said, the VA has changed and evolved with times and made it more, we'll say made it more, I guess, easy for lenders to close the loans, or maybe more guidance, qualify for more veterans.
A whole lot more. I mean, you got to remember, I started almost 32 years ago.
Yeah.
And so, you know, we have everything, you know, is automated and upload and all that stuff like that. We went, when we took an application by hand, we went over and typed on a little teeny typewriter all the information, and it spit out a thermal thing of a long, long credit report. But back then, everybody like, okay, I need 2 months bank statements, I need 2 years tax returns, you need all this stuff, and you get it all together, make copies, you know, and you stick it into a FedEx with signed documents, and then you overnight it to somewhere for underwriting, and then I don't know, a week or two later, you hear back, and you're like, you're approved. Like, yes, what how do we need to do? And so it was very ancient back then, and it was standard 29-41 ratios and things like that. You know, you have compensating factors. I mean, I had one, believe it or not, that closed a little over 70% debt ratio.
I was just about to say, a lot of people don't understand that there is no such thing as a debt to income ratio when it comes to a VA loan.
It's residual, and what other compensating factors. Obviously, that one had a lot of compensating factors. You
Yeah.
know?
Yep.
Yeah.
Absolutely. And that's I mean, the handbook literally says, and when you're reading it, it says like they want the lender to do everything in their power to make the loan for the veteran. And when you start in, you're right, 30, when you got in the industry, it was harder to close a VA loan. Now that everything's streamlined, now I can get a certificate of eligibility within, you know, minutes of talking to a veteran. And
First thing you do after the application with us.
it should be the first thing you do. It should be the first thing you do, and that's what's something we want to talk about here, you know, later down the line. But
Something you also mentioned earlier, and sorry, I wanted to try to stick it in there, but you know, you mentioned, you know, you always thank someone for their service, and I started realizing after a long time, it's like, you know what, and you got to thank the family, because imagine whichever husband, wife, whoever is serving our country overseas or wherever, that spouse, they don't have it easy. They're the ones that, you know, make sure everything's good at home and all that stuff, so that person can, you know, defend our country and have peace that things are going good there. Not that it's easy, but that's it's a family thing, that's for sure.
absolutely. And I think so. Obviously, now the VA has made it easier just by streamlining documentation. I think clarification on guidelines, and another big thing is making that VA appraisal. So I teach a VA Mythbusters class, and it's actually I have it as a continuing education credit now in the state of Ohio, and I do it every year, multiple times throughout the year, because the biggest thing is like the VA appraisal, right? Oh, I don't want to deal with that VA appraiser.
Yep.
And it is true. It is a specific VA appraiser, and it's, you know, not every single appraiser out there appraises for the VA.
Right.
But the biggest thing that people that have been in the industry for a long time and maybe not transacting with VA loans, because I'm in Northeast Ohio, so we don't have as many VA loans. For myself, it's typically somebody who was in the service 5-10 years ago. They're moving back home or whatever it may be. So we don't have too many active duty members in our area. I think the closest oh man, we have a National Guard base, I think, that's kind of small. That's within like a 30-mile radius. I think the next closest down in Dayton. So again, not something that we're doing with like active duty members, but the appraisal has now changed to very simple. This is what a VA appraiser is looking for: safe,
Safety
sound,
issues.
and sanitary. Okay. And my favorite thing to do now, and I put it up on the screen, and it's a picture from a conventional appraisal where they have a checkbox, and that appraiser has to literally mark: is there any safety issues? Is the property sound? Is there any, like, it's not sanitation, but I think, is it like livable, right? Is all the utilities working? And when I show that to a bunch of real estate agents, I'm like, this is the VA is making sure it's safe, sound, and sanitary. And what I do is I take we do like Price is Right, even though it's not Price is Right. I just have a picture of Price is Right up there because Drew Carey hosts that, and we're big Cleveland people, so we got to have that now, right? And it's like guess the appraisal, and I go through a list of appraisals. Then you have to guess what loan program it is, and one of it for myself was they needed to install 5 handrails, and everybody said VA. I was like, wrong. That was actually conventional, right? Because that's a safety issue. So if an appraiser deems any sort of safety issue, to peeling paint, to tripping hazards, to GFCIs, a conventional appraiser still has to check that box, which the VA appraisal says: is it safe? Is it sound? Is it sanitary? And obviously they have their minimum property requirements, but it's when you sit there and break them down, very, very, very similar to all other government loan programs, if not more lenient, and very now similar to conventional loans.
I'll tell you, VA is going to be more lenient in type of property. For instance, if you're near, anywhere that doesn't have log homes, and all normal guidelines, conventional about anything says, well, we need to have at least a couple sales on the appraisal that are log homes to make sure this is not too unique for the area. I've closed a few that it's the only home that's sold. So it's log home and 3 regular houses. VA, no questions asked. I've had one, it was $500,000 purchase price, regular type ranch house in 98.5 acres, 100% VA. The comps, comparable sales, for those who don't know what that is, any loan wants to see if it has 98.5 acres, if you're able to do it, it better have like 70, 100, something like that acres. The comps were 30 acres, 3 acres, and 4 acres. That is turned down anywhere else. VA,
Oh, absolutely.
no questions asked. That appraisal was solid, except for the deck was rotted. They removed it off, got a reinspection. It was good. No questions asked about adjustments for the land. This is too unique. No one would ever think that would go through. 2 lenders had turned it down, and got it done, no problem. So
Yeah.
that's so cool. Horse farms, things like that. You got to give things, might be a $400,000 barn on it, but commercial value. I've done those. I've written articles about it. It's VA will go outside that box, and where other loans won't. And that's the fun part about it, is educating people. It's usually with realtors that I do, that just let them know, hey, $1 million horse farm, VA will do it, no money down.
Yeah, so let's go to the other side of a VA appraisal real quick. I don't want to spend too much time on just VA appraisals, but we're shifting, and the market's shifting a little bit over to a buyer's market. But for so long, I mean, probably since 2018, we've been in a seller's market where you've witnessed. I mean, I don't have to sit here and tell the horror stories of me calling a listing agent. Like, I don't even know why you're calling. There's 30 offers in right now. So I mean, it's going to go to highest and best, right? And we had so many listing agents that would just throw out a VA loan, and I started making this presentation where it was like, okay, well, would you be willing to accept a loan, an offer that not only if we're going to have an appraisal done, but if that valuation comes in, we have not just 1 but 2 safety nets to help with that valuation, that purchase price, right? So the first thing that I would mention is the Tidewater Initiative, right? Where we actually, you know what, Mr. VA, please explain to everybody what is the Tidewater Initiative.
Yeah, and very unique. That's where the VA appraiser, they've done their work and everything, and then they feel that it may not meet the purchase price.
Yes,
Okay,
that's a very important what you just said. It may not may
I've
not.
had plenty that, where they say, "Hey, I don't have anything, but let me explain." So, we're given, us as the lender, are given a notification, and we have 48 hours to get any comps, comparable sales that the listing agent and the buyer's agent have or want to provide. I just had one, $600,000 purchase price, Tidewater, and so the buyer said, I'm not going to try to help that value out. So, okay. So they didn't offer anything. Listing agent did, came in at 589. And, but you got 48 hours to provide any comps, get that in, submit it through VA, through the portal. And then the VA appraiser is going to take all that information. So what's really cool is you get a heads up. Other
Hmm.
appraisers, I mean, they're not going to talk value. They're not allowed to talk value to you or anything like, and they can't either, but they're giving you heads up. You got 2 days to help me help you. And, so that's pretty cool thing that you get to do. And, a lot of times it works out, you know?
Yeah.
So,
Yeah. And I love how you said it, that they're yeah, absolutely giving you a heads up. And they're not saying that, oh no, we're coming in low. They're
mhm.
saying, I'm having issues getting the valuation, the purchase price. Can you
Right.
please provide
Right.
me with some comps? And yes, you have 48 hours. And it's not only is it a great heads up, it's a great communication from not just the lender, but the borrower, but also to think about all the other families involved in a transaction. I talk about that in lending all the time. How many families are involved in just one simple real estate transaction? And now we can let the sellers know. Now we can let the buyers know. Now we can let the agents know on both sides, and we can all come together as a team and like, hey, this is actually where this is where we came up with our offer. This is where the
Right.
listing agent came up with these in their listing presentation when they found the market value of the house and what they want to list it for. So it's very
They're gonna
cool.
know it the best, right? They're going to know it the best, and the buyer's agent's going to
Yeah.
pull comps to figure out what to offer and all that stuff. And so, yeah, it's huge.
Yep. And then there's still one more thing that goes with that Tidewater. So let's say that the appraiser gives us the report back. The notice of value comes, it says it's low, and it comes in $10,000-$15,000 under value. There's still another thing that, with a VA loan, the veteran can do, and that is a
Oh,
reconsideration of value and send it
right.
down to the ROC. And I don't want to. I'm going to say the stat, and it's old, but I remember it was like 71% of all reconsiderations of value gained extra value when it was sent down to the ROC.
Oh,
Like,
wow.
they are so flexible. Now they're not just going to do it to do
Right.
it, but
Right.
when I said that the VA literally wants lenders to do everything in their power to have to make the loan for the veteran, this is such an awesome safety net for the veteran when they're putting in offers, and not just the veteran, not just the borrower, but also the listing agent, because a lot of people don't understand. 9 times out of 10, because we're really good, Russ and we're really good at our job. At ALCOVA Mortgage, we're great at what we do. And when that appraisal is coming back, we're heading to the finish line. We're done. We're rock solid. So imagine, you're 2 weeks in and that appraisal finally comes back. Well, we had people, movers, we had this, we had, where they're purchasing this house. So they had a net that they were expecting, and now they're not there. So it gives that second safety net, as opposed to conventional loans, where it's, hey, this is appraised. I mean, I'm sure we could all sit here for an hour and a half and talk about the horror stories of underappraised homes with like a conventional appraisal, and trying to get them to change that's like trying to get my 5-year-old to change his underwear. It's just not happening, right?
I
So,
had one come in at 63,000 low the other day.
oh,
Now another lender had one go through VA, and they didn't like it, so they wanted to go through us and everything. Okay. And it came $63,000 low, and
wow.
and everybody ended up agreeing with it. Yeah, there's no comps.
Sure,
So,
sure. Yeah, back to that. That's not our problem at that point. That's back to the negotiating table, right? Like that's
right.
what
That,
the
that
real
was not to
estate
get a reconsideration of value. So, hey, I mean, you
right.
got anything extra? Nah.
No, yep. And hey, we've had that too, right? Where we've had a Tidewater come in, and everybody's like, no, this is it. And I think the most important thing too is it's when it's the Tidewater initiative, it's on that veteran, right? It's not just like, hey, we're going to go out and do it. Like, if the veteran comes in, nope, this is the appraised value. That's back to the negotiating table. That is what it is. But it's an advocate. We the VA becomes an advocate, allows that for the veteran to make sure, hey, let's just make sure, I always argue, what is the appraised value of something? It's what somebody's willing to pay for it, right? So it's tough to, when you're looking at a house, like a purchase contract, that appraiser is like, oh, well, this is worth $350. So I gotta, I'm looking at the house and it's worth $350,000. It's only when, we come into the comparable sales, that it's like, oh, maybe it's not worth $350. So the VA understands that concept. Like, hey, this is what the veteran's willing to pay for it, and we want to make sure we get this deal done. So that once we move into a buyer's market, you may not see that tidewater, but it's there, and it's a nice safety net to have, especially when you're a listing agent, because the last thing you want to do is go to your sellers and be like, apparently I was wrong on the price, or apparently we were off on pricing. Here's where the valuation's at.
Right. I get common if appraisal comes in low, the knee-jerk reaction is usually, that's a bad appraisal. Well, okay, give us some comparable sales. And a lot of times I might get something back and like, that's not a good one. That's going to make it come in lower. Let's look at it and make sure that you're giving us something good here. But now something you've mentioned, you touched on several times in here, and a lot of people don't think of it this way. And you got to think of stuff from a seller's perspective too.
Mm-hmm.
Like you said, especially when it was seller's market and 30 offers. Hey, we got a VA. These people are putting 20% down conventional, 50% down conventional. And it's kind of the stigma is like, someone's doing no money down. They're not a strong borrower.
Yeah.
So, what we're big on doing is not only getting a pre-approval, but I want to be able to, tell my client, look, it's very important for you to provide everything up front to me that we asked for, because my goal is to truthfully be able to say to a seller how strong of a buyer you are, and we will close as long as their property is good. And so, hey, we have fully reviewed income, assets, credit. They are solid. And with permission of the buyer, if they got $100,000 in the bank, I will put in there that, look, I won't say that, but I'll say the borrower could put down a significant amount of money on this, but it's just a better financial strategy not to do that. And you'll see this is a no money down VA loan and everything. So I'm going to sell it truthfully, but I am going to sell it because that's what you're doing. You've got to give that seller confidence in one, getting past it, whether it's the realtor's been bit by something with VA in their opinion, which happens in every kind of loan, or someone, the misconceptions, oh my gosh, the VA is going to get us because this house is not brand new. None of it's true. And so you got to really perform for that seller and seller's side, because, I've been on the seller side. It's nerve wracking. I mean, you're packing, you're doing all this stuff and everything, thinking everything, you're hoping everything's going to go good. So it's real important to right up front, give them confidence, and throughout the process, give them confidence. I mean, when we get that appraisal and it's all verified and everything, if it's good, I'm asking the buyer and the buyer's agent, are you okay with me? I won't say if it appraised high or anything, but hey, it met value and it's good. Is it okay for me to tell the listing agent yet? Because that will make them feel at ease. I mean, the buyer's flat out my client, but you got to think about that side too, whether it's VA or anything else. So, but you do have to make sure, not as much now, because everybody in some markets might be, hey, I got a buyer. So it is important to make sure that that you're getting past all those misconceptions on that side. And there's been plenty of times where, hey, I'll talk to the seller if you want me to, listing agent.
Yeah.
And I'll do that. And hey, tell me your questions. Again, I can't tell you any personal information about my client, but I will answer you truthfully on everything.
Mm-hmm. Yeah. And honestly, I think that's such a big thing, like the culture at ALCOVA. And I'm not sitting here selling ALCOVA, even though I got the logo right here, right? I'm not saying
you say that right when I'm drinking
coffee. As you're drinking.
What are you talking about?
There's I wouldn't know. But we do such a good job of, presenting offers. Like, that's a huge thing. You have to present, like, if you're going to get rid of the stigma around VA, or if you want to become a loan officer that is really VA heavy, then you have to present offers and you have to get out on the front lines when presenting those offers, because 9 times out of 10, that listing agent is going to have that. What we've been talking about this whole time, like, I'm not going to accept that. One of my biggest sayings was that I don't have the data, the up-to-date data, but from 2 years ago. So all of last year, I would say, did you know that the denial rate for conventional loans last year was 13.9%? While the VA is under 9%. So if you're sitting here saying, I'm going to take a conventional offer over a VA loan because I want this thing to close, well, you line up 100 conventional loans, 14 of them are going to get denied, while you're lining up 100 VA loans, and less than 9 of those are going to get denied. It sounds like you should probably take a VA loan. And you mentioned the big box lenders earlier. Probably most of the VA denials were from, I call them headset jockeys. And they were probably sitting in a call center and they had no idea what a certificate of eligibility was. And they get that loan through the pipe and they want to order an appraisal. And now, thankfully, the VA requires, before that VA appraisal can be ordered, you have to have that certificate of eligibility. But for a long time, you didn't need that, right? And all of a sudden, you're getting a VA appraisal ordered, and then you get that, the certificate of eligibility back, and they're not eligible for a VA loan. And that's probably the high percentage of those VA loans that are denied because of bad loan officers not pulling. I mean, it's like saying, like, I'm trying to give somebody a student loan, and they're not going to college, right? Like, well, then you can't get a student loan. And then we're going to add that part of the denial rate.
There's some that, I mean, we always check it, like you said, and sometimes you have to provide more information and everything, and especially reservists, you need more time, more credits in and all that.
Mm-hmm.
But I mean, I've had someone on VA disability. You would think that they would get it. No, not always. Yeah. That really surprised me when I got my first one like that. So, yeah, it's really something, and you gotta do that up front, and you might find that, a big thing you're looking for too is, let's say they're going to do a $800,000 VA purchase, and they're saying, "Yep, I got full entitlement and all that stuff like that." Foreclosure, VA foreclosure 20 years ago, and it's affecting their entitlement. And probably have to put it down a little bit of money because you're using bonus entitlement. If they're doing a $400,000 one, they wouldn't have to probably, but you've got to do that. I don't know if you're talk later about this, but whenever we talk about multiple VA loans at one time, I've got a foreclosure thing to tell you about. It's crazy.
Yeah, and I know we're talking a lot of like inside jargon as a loan officer. This is what your loan officer should sound like if you're trying to get a VA loan, right? And if they have no idea how to calculate eligibility, like. When I was having some trouble getting the certificate or the continuing education class license, because they wanted me to be like more specific. Like, they were like, "Why don't you teach a class to real estate agents on how to calculate eligibility?" And I'm like, why would they need to? Number one,
yeah,
right? That's an awful thing.
That's what you hire a professional for.
That's what we're here to do.
Yeah, and let me teach you how to build a house real quick.
Yeah, right? Like no, I don't want to. No, so. I'm going to get a good builder that's going to build a house. I'm as handy as my left foot. You're not changing that, right? Mm-hmm. So if you could real quick, let's talk about, we'll try to simplify. If you're a veteran, if you were in the service, because I wish I could find that stat again. I remember hearing it when I was at the VA Lenders Conference, and there's like the amount of eligible veterans that have never used their entitlement or their eligibility is just wild. And the amount of veterans that are sitting on the sidelines. So let's talk about that real quick. If you you're in the service and you're honorably discharged, you get a little form. What's that form called?
DD-214.
DD-214. And on that DD-214, which we used to need, you're going to eventually need to grab it. You used to have to do that. Now I'm sounding old. I remember trying to get a certificate of eligibility, and it used to take 48 hours. I'm sure it was way worse for you when you started.
Let me tell you, back in the day, you don't see it as often anymore, but I've had clients bring in their green paper certificate of eligibility.
I've seen one of those. Yep.
And I've kept this and I want to use it now. I'm like, and okay, I mean, that's awesome. I mean, and that means the world to them, that piece of paper. So you got to recognize that, but we're still going to do it online with VA because we got to have that. But it's really cool. And but they weren't explained anything about what it is. I've got a certificate. I'm guaranteed to get a VA loan. That's not what it means, but all right, let's start with
Yeah.
that. That's the first step. You've got certificate of eligibility gives you the chance to get a VA. You're eligible to get a VA loan. So let's talk about credit, income, blah blah blah, and everything. But yeah, it was first time I saw that. I was like, oh wow, that's something that's probably in the '90s, it's really something, and but it's now electronic. I don't know if
Oh,
anybody
yeah.
ever has one. But
Yeah, it is. Yeah, so anybody that's I ask for like their DD 214, that's just habit for me now, and being
Mhm.
in the industry where we weren't able to go grab it as easily as we are now, like a certificate of
Yeah,
eligibility. So I'd always
we
ask for it.
and we haven't had to ask for DD-214 in a while,
Yeah.
but when the certificate of eligibility says we need more information, can't
Hmm.
quite figure out what they were and all that, that's when you get it.
Yep. So that DD 214, it used to be your meal ticket into getting your certificate of eligibility, and on that certificate of eligibility, that tells you everything you need to know as a veteran, because, like you just said, you've had people with VA disability, and they are not eligible for a VA loan. So imagine going to a loan officer who doesn't understand VA loans and saying, "Well, I get my disability from the VA." All right, perfect. We'll give you a pre-approval letter. We'll shoot it out, and happy house hunting, and then you're part of that 9% that the denial rate, because you have no eligibility. So on that, it talks.
They'll even do zero funding fee because they got VA disability.
Yeah,
There's no
yeah.
funding fee too. Boy, they got a nightmare there.
Right. And then you, as a veteran, you see your either A, remaining eligibility if you've used your VA benefit in the past, or it shows that you have full entitlement. And that's where I kind of tell, it's my favorite thing to start out the Mythbuster class with. So if you have full entitlement, Russ, what is your max loan amount?
Nothing.
$1 billion, a trillion.
Now the biggest one I've closed is on a purchase is
Yeah.
$1,975,000.
Wow.
And no money down, no PMI, no funding fee. It was exempt from the funding fee, and talk about having to explain. Had a seller
Yeah.
that was like, I think it was a banker or something like that. I can't remember, but did not believe it. I want him to put down 20%, and all. What?
Yeah.
So anyway, we closed it $1,975,000, zero money down. I believe the seller paid the cost, brought nothing to closing, or practically nothing to closing. Best loan in America again.
Yeah.
So,
Yeah,
uh,
because when you have that full entitlement, there is no max loan amount, and that kind of segues into our next, and why it's so important to work with a loan officer just like Russ, that understands VA loans. Because let's say you had a foreclosure, let's say you have a current home and you're not selling it to restore your entitlement, let's say whatever it may be, you have an investment property, because that is another myth that you can build an investment portfolio with a VA loan.
heck
Absolutely,
yeah.
I've taught classes at the VFW hall where I buy get the wooden nickels, and I'll buy some beers for some guys. I'm like, hey, you guys want rental properties? Let me show you how you do it with no money down every single time. But
Mhm.
where you have to calculate your eligibility, because there are some instances where you're going to have to bring a down payment, or you run out of your basic entitlement and your bonus, so you're going to have to structure the deal accordingly. Now, it's not 20% and that's my favorite thing when I start explaining this, like, well, what about mine? I'm like, well, okay, well, we have to pull your it's everybody is going to be different
I
depending
don't
on how
like to
much.
guess on it. Yeah, I do not
Yeah.
like to guess. Yep.
Nope.
Let us get the certificate of eligibility. We plug it in. And now if someone says that, hey, I have a $250,000 VA loan right now, and I want to go buy a $350,000 house. That's 100%, no money down.
Yeah.
I know that. But you start getting on up there, like you were going into there. We got one VA loan outstanding, and it's tying up $52,000 of entitlement, and that's something too that's confusing to people. And I just
Yeah.
forget that
It's not
number.
actually $52,000,
Yeah,
right?
yeah. Hey, I have a certificate of eligibility for 36,000. Is that all I can get? Forget
Yeah.
it.
Yeah.
And and it's it's a weird thing, but whoever came up with that formula. But anyway, you know, no, it's if you have this, we're going to figure up based on factors. What's the conforming loan limit? You do have to get involved with that for the county you're buying in. How much entitlement is used, and what's the purchase price of this property? And then and appraised value for it in the beginning, you assume it's the same. and then it's going to say zero money down. Or when you get up to certain lists, and I'm making this up, say it was 350, no money down, 375, no money down. At 400, it goes, oh, you just went over. Now you're bringing like 1.2% down payment.
Right.
And then you go to 450, it might be 5.5%. It's not some set thing. It's a calculation of those things. We'll do it for you,
Yep.
but that's real important there. And that's where when it comes into having multiple VA loans, and usually it's because you have an investment property, you can actually have 2 to 3 VA loans at one time. Technically, you could have more. And
In Northeast Ohio, you could have more.
yeah, and but
Lower loan amounts.
if you got a 200, a 200, a 250, 100% on that third one, no
Yeah.
problem. One that I had not long ago, they had about a $300,000 VA loan existing, and they wanted to buy a house that's about $400,000. Normally, no problem. You get the certificate of eligibility. There were 2 VA foreclosures, like in the 90s. Okay, so they still show up, but fortunately, because it was in the 90s, the prices were very small. The losses were small, so they actually had 3 different VA loans holding up entitlement. Okay, now they're buying a $400,000 house, and they had to bring, I want to say it's either 8,000 or 12,000, 8,000 or 12,000. No PMI, rates better than conventional or anything like that, and there's technically 3 outstanding VA loans out there.
Yeah.
Unbelievable.
Yeah.
I mean, so next best thing is, like, let's say it was FHA, 3.5% down, PMI, funding fee, all that kind of stuff. And so that's just amazing right there, being able to do
Yeah.
it like that.
Oh yeah, absolutely. And it's
And if you have a foreclosure, I had another one. This made me think of something where husband and wife both are veterans, and he has about a $600,000 VA loan outstanding, and they want to buy about a $400,000 property. And he doesn't want to sell his house first, so that's a problem. You're gonna have to put a lot of money down because you got 600,000 and doing 400,000. So, well, I mean, you're a veteran, right? Yes. Talk to the wife. Yes, but I'm not eligible. I had a bad debt, foreclosure, short sale, something like that, VA and everything. Okay, was it like a year or 2 ago? No, it was forever ago. Let me get your certificate of eligibility. Hardly any entitlement used. 100% financing, $400,000 price, because using bonus entitlement, and hardly any of it was used. And so we used her entitlement instead of his, made it 100% financing, no VA funding fee because she's exempt. And then that gets into our VA buy then sell, where because they're going to sell or rent that house, the $600,000 house, after this purchase, we were able to prove what the market rent is on that property, and we were able to exclude that big payment from their qualification to help them buy this using her entitlement, no money down, no funding fee, keeping his outstanding, not counting that payment to debt ratio. That's fun. That's where I get nerdy and all this stuff like that.
You're the one that said it, not me. But yeah,
Happy to say it. It makes I get all happy about that stuff.
yeah, and the company you're working with absolutely matters, because I can guarantee you, the company and the loan officer, I can guarantee you that a company name that you think is associated with the VA, because they're real sneaky, right?
All
right?
the time. No, man, I work directly with the VA. Oh my God.
Yeah. No, you don't. Nope.
So
There's
many,
no such thing.
so many clients think they work with VA on that. VA said
Right.
this.
Yep, because they may throw veteran in their name, right, and they market it that way, or United States of America, anything like that, and then everybody just associates. Oh, that's I'm working with the VA. Guarantee you, in that scenario, they would have collected, they ran a credit report, got you under contract. You would have spent money on inspections, and all of a sudden they would have denied your loan. Right? They would have denied the loan. They would have not understood exactly how to calculate eligibility, because it absolutely matters who you're working with. And I'm here to say that I know a lot of loan officers. The cool part about this industry and traveling and doing content, all that fun stuff, is that you get to meet so many lenders, so many loan officers from all across the United States. And that not many of us talk like the way that you are talking right now, Russ. Not that many people understand VA as much as they should. And you know what? One of my biggest things that I talk about with my team and and my clients as well, my referral partners, is where it's like, yeah, you know what? We may offer a certain loan program, but I'm doing a disservice if I don't understand it, right? If I don't understand it, and I'm not able to help you walk through it. Now we'll learn it together for sure. Unfortunately, VA is so commonplace in the industry that every single loan officer is going to want to try to tackle it, and they're going to, not understand, and or they're maybe at a company that doesn't allow, like what you just said, like the VA buy before you sell. I know a lot of lenders that don't do that, and even though it's
Don't
a
know
VA
about
guide,
it or don't.
it's a,
Right.
yep, and they may have some
Whenever I made
overlays.
when I made a decision to come to Alcova, it's very important that when you work for a company, you got to make sure in the industry you call it overlays. That you don't have all these overlays, extra guidelines on top of guidelines. It's like this is not VA, but FHA. Commission. You got to have 2 years of commission. You only have one. Conventional, but that's what lenders, banks put on top of the actual guidelines to make them feel better. Like, no, this is the requirement. Why are we going to make it harder for you to qualify? And so, whenever I can, I bring up this guy. His name's Dave Jones. He passed away last year, but smartest underwriter ever. And it was funny back a long time ago. I worked with him, and he was one. I get up early, and I could call him at 5 a.m. He's at the office with his '70s rock and his long ponytail until he cut it off, and he knew everything. And the VA buy and sell, or say someone is hey, husband works in Texas, wife is going to buy a property in Columbus, Ohio, and the kids are going to be there. Lenders go, nope. Can't count your income. You're in Texas. I can't count that income. Yes, you can. It's very specific, and proof and letter and how you're going to travel there and count all this stuff like that. And again, written articles and videos on that too. It's you can do that. And so I learned that from him, and that came from, I was in a training with VA, and I have the PowerPoint. You want it? Yes.
Yeah, absolutely.
And,
I still have an eligibility spreadsheet. Like some underwriter made it on an Excel spreadsheet. It's just this little calculator. He's like, yeah, it's not from corporate. I made it myself. You want it? Yeah. Yeah, no, I
See,
love
and the
that,
thing
right?
about it is a lot of things are not in the VA guidelines. VA will allow it, but they can't put every scenario in there. No
Right.
loan can. But and VA guidelines can get a little vague, but it gives them wiggle room where VA is okay with it. As long as they are, when you hang our hat on that, then well, why are we going to do it?
Yeah.
And fortunately and unfortunately, other lenders will say, sorry, can't do that.
Yeah,
Right.
it's a hard line in the sand. And what's cool about it, and you got to make sure, especially if you're a loan officer, if you're a real estate agent looking for a referral partner, you want to ask that question of your lender, of your loan officer. All right, well, like if we're going to dive into a VA market, do you guys have a good relationship with, not a good relationship with the VA, but are you, is there a lot of overlays? Is there, or is it cut and dry, or is it how the VA handbook? I always try to describe like FHA conventional, it's like a vast ocean, but it's it's like a sea, right, if you will. And the USDA is like a box, like when it comes to underwriting guidelines, right? There's no outside of the box. This is what it is. Sorry, that you're out of luck. I do not know how to describe the VA when it comes to their handbook because it is so fluid, right? And it's the VA will guide you. So some lenders will not allow. I remember being at one where if I call down to the VA and ask a question to one of their somebody at the resource center, and they give me guidance and they will put it in an email and they will send it to my underwriter, or they'll say, have your underwriter call this number. We'll talk this through and make sure they're comfortable with it. But this is the way the VA would look at it. And if you're not working for one of those lenders, if you're not working with one of those lenders, that's absolutely one of the questions I'd be asking is like, hey, what's your relationship like with because we're going to run into weird scenarios, especially when it comes to somebody who may be active duty. And, can we reach out? Because no matter how smart I may think I am, Russ, or how smart you are, we're going to miss something and we're going to need guidance. So is it, are we able to reach out to the resource center and get that guidance and say, all right, perfect, we're going to get it done for this veteran, as opposed to, nope, this is it, done, which is why that, I still think it's a great stat that the VA should hang their hat on, that it's only 9% of all VA loans are denied. But, the big portion of those are probably from those lenders that are just saying, nope, sorry, can't do it. And then they're calling Russ, and then Russ is saying, no, this is the actual guideline. Let me be an advocate for you.
Yeah. And again, I get nerdy on it, but that's fun too. To be able to, like, someone go, oh my gosh, 2 lenders say we can't do this. Okay. I mean, probably can, but let's check it out.
Yeah.
And, I worked with another lender. I want to say it was like 2 or 3 months. I flew up to their corporate office, sat there with head underwriters and everything, and asked them questions like this. I learned that I better ask a lot more detail. You do VA loans? Oh yeah, we do VA loans. Do we do USDA? Yes, because they weren't North Carolina rural and all that stuff. And I found out that yes, we do VA loans. They have done 10. They were still getting them reviewed by VA when they have to underwrite and then send it to VA. I was like, what? They actually conditioned on one of my clients that we believe that they're not really going to occupy this house. They're going to buy it for their brother. I was like, what brother? And somehow they came up with some name, and it was really a brother. They probably saw it on a document or something like that. I was like, what? So what we're going to do, you probably don't want this on your podcast, brother, but
go ahead. Yeah, no, go ahead.
But they said, all right, what we're going to do is we're going to put in escrow $500, I think it was $500 or $600, and for each month for up to 5 or 6 months, we're going to have an appraiser go back out there and just verify that they are really living in the house. And I was like, are you serious? And I don't remember what happened there, but then I had a second VA loan right away. They did the same thing. They said, we don't believe that they're going to live in this house. Like, hold on, y'all just did this to me. I was like, are you serious? Yeah, and it's some other family. We believe someone else is going to live in this property. I was like, okay, y'all getting ridiculous. And then they said, well, look, here's all we got to do. I was like, you better check with VA, because I think you're going to get in a lot of trouble by charging a veteran that you don't believe that they're going to. If you don't believe they're going to live there, I don't know what you got to do, but you don't do that. I don't think that's an allowed VA fee.
I believe you should not be writing VA loans is what that should be. Yeah.
So I called the second place lender that I interviewed with. I was like, okay, here's the 3 issues I had. Can we talk about those 3 things real quick? And boom, I was over there. I was like, holy mackerel. They had no clue what they were doing at that place. And it was a pretty big place. And so that gave me the inside of all the stories I heard. And I was like, yeah, we do VA loans versus we know VA loans is a big difference.
Yep. It's in the way you operate. It's in your blood, if you will. But it's, it is eye-opening. Again, like when I said I have the opportunity to meet so many different loan officers, and I actually one of them that I've had on like my own personal podcast, and he's like, like he writes billions of dollars of mortgages by himself, and he's like, you know what, I've never been close to a military base. I don't know the guidelines. Just not something I'm going to offer, but I'll refer it to somebody who understands it and is passionate about it, because he understands, like, it's once you learn the guidelines and you're working with a loan officer that understands it and a company that advocates for it. I mean, you're right. It's the best loan in America. It's my favorite. I have a shirt. I should have wore it today. Even think about it. It says VA loans, and then it's with a little greater sign going towards VA loans than conventional, right? Saying that VA loans are better than conventional loans. So they are. If you build your business around it, which you have, right? So let's talk about that just a little bit. So we understand. I feel like you and I could talk about VA loans and why they're awesome and all the myths and why real estate agents that don't accept VA loans are just horrible people, right? We could talk about that forever. But how have you built your business off of VA loans? Because I feel like once you're an advocate for a veteran, they're going to tell every other veteran about it, and it's just their culture. So how have you? Do you remember when you decided, all right, I'm going to build my business and really be an advocate for veterans in my area? Like, was there like one certain point? I'm putting you on the spot for this one, by the way.
Yeah, that's a good question. I've never been asked that. It's funny. I worked in in a town at a military base and never did a VA loan early on. It just
Oh,
wasn't what my company focused on.
sure.
And so that was really something. Then, of course, then they moved me to another town, another military town. I still did not do VA loans. That was in the 90s. But anyway, I'm guessing that, I'm going to have to go back to the underwriter, the head underwriter I mentioned to you, Dave Jones. He pushed my mind, like we're doing here, that, VA is not cut and dry, 29-41 debt ratio. It's not, you got to have so much reserves. It's a fluid thing. It's like, hey, we got some compensating factors here. I mean, you don't have to have a dime and get a VA loan approved. You can have, I got $100 in my account. And if you can talk a seller into not taking earnest money or something, or get a gift or something like that, pay all your costs, which can happen.
Yeah.
You can buy a home, no money down. And so when I knew that part, but when I started realizing it was kind of one at a time, just all of a sudden it's like, whoa, you can do that. And then not in the guidelines, you just figure it out, and like, whoa, you can do that, and then that, and just kept building. Like, holy mackerel. And back in the day, there's about 3 years, my part-time job was writing articles for a mortgage company for the marketing department for leads. And most of what I wrote about was VA, is about the stuff we're talking about here. Because if you write about just best rates or mortgages, term, I mean, there's a billion people out there. But when you talk about specific problems that people have, any of these things we've talked about, and you can talk about these outside the box solutions that VA can do, then you quickly learn, oh my God, this is amazing. $2 million property, no money down. Have 3 VA loans at once, possibly no money down. Seller concessions. That's a cool thing right there when you talk about, because sales concessions, people don't know what in the world they're talking about. Yeah, VA can only, you can only have 4%. Seller pay costs, FHA 6%. That is not true.
Yeah, it's what you call it, right? Like, so I love the VA. You can get you can get money from the seller, let's just say that, and pay off debt at closing. Like, I've had that. Yeah.
Yeah.
It's
Um,
oh yeah.
okay, I got to tell you about the best VA loan ever. That's the name
Oh,
of my
that's right.
video.
That's right. Yeah. Let me hear it.
My best VA loan ever, and I might forget part of them. Okay. Clients referred to me, husband and wife. One's in the military, one's veteran and disabled veteran. Okay. And first time use VA, I think. Doesn't matter, but they're looking to buy a home, and it is $440,000 purchase price. And it's, we got a lot of complications here. Okay. And so they want to bring nothing to closing. Hey, dad will give us a $250,000 gift. I'm like, oh wow. Okay. Congratulations. But
Yeah.
then it's like, oh hey, I was like, and this is where you're not an application taker. Make sure, have y'all talked to CPA about this yet? I don't try to have a big old tax
Right.
issue here.
Mm-hmm.
Talk to the hey, yep, you're right. Thank you for saying that. So ended up doing a second mortgage for $250,000. And I said, now look, there's things you can't do. I'm not saying you're doing fraud, just saying you do something, you just release it and all that. You can't do that kind of thing. And so it was a legitimate second mortgage. We did a $190,000 first VA loan. Okay, a $250,000, really low rate. It's something that was allowed. Had a payment and everything, but it was better than VA, and not many people have this. So they did $190,000 us, $250 there, adds up to be $440, no money down. So that part, pretty cool. I've not had that kind of situation. All right.
Yeah.
And then we're going to use your entitlement, ma'am, because you had the VA disability. They didn't know that. So okay, I said, we could use yours, but you're going to pay 2.15% VA funding fee. Why do that?
Yep.
It's over $8,000. Okay, makes sense. Cool. All right. Hey, dad's also going to give us a gift towards our costs. I like your dad. So
I was gonna say.
Okay.
Yeah.
But then we had $18,000 in sales concessions from the seller. And I was like, now, just saying, your costs are not going to be $28,000.
No.
So, and then I said, and I apologize somewhere in the conversation, like, I'm sorry. I know I'm getting really excited about your scenario because you got my brain going and I'm loving this because I have a feeling we're going to use every guideline there is in the book. And so we go through all this and the seller pays went towards some regular cost and everything. But then we got appraisal was fine. And don't forget, I'll tell you about the appraisal. It's pretty cool too. It puts the cherry on top. They want as well, nothing's wrong with this, but we want a crawl space encapsulation. We want gutters. Give me an estimate. $11,000. Seller paid for that. You can't do that in conventional FHA
Nope.
or anything. They're going, oh, what's wrong with the house?
Mhm.
Appraisal's fine. We got it right here. We want that. It could have been a golf cart. It could have been whatever. So they paid for a lot of the costs and all that stuff. And it's like, we're out of cost. So we got some gift money from dad. You have no down payment. Bought the rate down, a permanent rate buy. No. We did a 2-1 buy down too. That was it. 2-1 buy down. So temporary. So their rate was like 3 something first year, 4 something, and 5 something. And then we had some more that went for some costs, and they got all their earnest money back. So they had no money out of pocket. All that stuff I just said, and it appraised for $90,000 more than the price.
Oh, that is the cherry on top.
The best
Right.
VA loan ever.
That is a really good story. That's a really good story. And
And when I did my pre-closing call with them and everything, I was like, oh my gosh. The listing agent called me. She says, look, I don't do a lot of VA loans, but can you tell me what's going on here? It's like, yeah, hold on, this is fun. And I told her, I said, now look, there's a lot of stuff, but fortunately, hopefully you can tell I know what I'm talking about. There's no way on earth. I mean, I'm sure there's some people that can figure it out, but it's pretty cool when you know that there's not many people that can figure all that stuff out.
they can do what you do.
And so I can't fix a car, I can't build a house, but I can figure that mess out. And
You can
but
fix
that
it.
was
You can
really
fix it.
fun, and it's like y'all. They should be customers for life for sure. And I can't wait till we do your next VA loan because you can have 2 or 3 VA loans. You can have 2 or 3 VA loans when it's a beautiful thing when you're husband and wife and you can do all this stuff.
Yeah.
So that's the best VA loan ever.
And every single other loan program out there would not have been able to do what you did with that.
Not probably half of it.
No, right. That's awesome. And they come into the property. They use some of the monies to build equity, right? So they did some repairs to the house, and by the way, it appraised for over $90,000.
Yep.
They're walking into a whole bunch of equity.
Exactly. Now, and I meant to say this earlier, just a scenario. It happens every once in a while, but hey, I want to use VA. I remember one particular case, $500,000 purchase. But I'm gonna put 20% down. Okay, I'm making a note of that. So okay, but curious, why? Why do you want to put 20% down? I mean, I want to make sure you understand VA doesn't require that. You have full entitlement. I know, but the payment's gonna be like probably I'm guessing $600 more than I'm used to. Okay, all right, got it. Have you talked to your financial advisor about this? No. Okay, look, here's the deal. I'm not giving you tax advice. I'm telling you the questions to ask. You're going to take $100,000 out of a retirement account.
Yeah.
You're going to pay taxes. And I believe she was retirement age, so she could take it out without penalty. But you're going to pay taxes on $100,000, okay? Go back to your financial advisor and ask this. And again, whatever way you want to do it, I'll do it. But I am not an application taker. We cannot be application takers. I want to make sure you talk all the strategy. So in the end, you're an informed buyer and you get what you should. But go back and just say, hey, financial advisor, would it be better for me to do that? Pay taxes and all that stuff. And if that's the answer, cool. Or should I instead, if you're saying the payment's $600 more than you're comfortable with, how about every month you pull $600 out of there? It's $7,200 a year that you pay taxes on instead of $100,000 at once. And she said, ooh, I'll call you back. She came back. She says, that's the one we're doing right there. I want to borrow 100% financing. And she was exempt from the funding fee. She had 100% VA disability. So there's no reason to put that money down at all.
Yeah, absolutely not. Yep.
So I said, look, I want to avoid a taxable event for you if at all possible. And so yeah, that's where you got to be different than, the big boxes, or whoever's just not familiar, or just an application taker in general. You got to make sure you're talking to someone that is a strong loan officer that's going to dig deep and find out, make sure that is the right solution, and that it's just not taking what they say, because the client doesn't always know what they're getting. They don't know all the guidelines and all the benefits. And if they do,
Absolutely.
make sure you tell anything you can think of so that they have at least thought it through. And even if she said, yep, we talked about it and I just feel better that way, then if that makes you sleep better at night, there's your answer. Thank you.
Yep. And you have to be an advisor. That's I mean I
Mhm.
throw that word around because I call myself an advisor. I don't want to be a loan officer. I don't want to be a loan originator. I want to be an advisor, right? Because I feel like a loan officer is just somebody who's, hey, there's a VA loan. Here you go. Ready? Here. Oh, you qualify. Boom. And what you just said right there is the difference between. I mean, the difference is tens of thousands of dollars for that client right there. And
Yeah.
because they worked with an advisor, not just about their VA loan, but you gave them great advice, and as opposed to, because you could have just said, all right, 20% down, great, that sounds good. Okay, I wouldn't recommend it, but you
Yeah.
were an advisor to them, and especially that veteran, and hey, here's what's cool about your VA loan, and it goes back to the VA loan being the best mortgage in America. Because you're able to do that 100% financing with no funding fee, and yes, your payment's a little higher than 20% down, but look at what it was doing to your tax.
What can you do with that extra money?
Yeah,
That's key.
absolutely.
Don't rob all your cash reserves. You are you going to have to put curtains in the house?
Right.
Moving expenses, whatever. Go invest it. Whatever
Yeah.
you're going to do. And
Yep.
most financial advisors would say you're going to take that much out of the market and pay taxes when that's not required. No. And if you're going to have to pay 8% compared to 6% or something to do it, okay, then you got something to think about.
Sure.
Almost every time, if you talk to a professional, they're going to go, no, don't do that.
Right.
Don't do that.
Right. And so to circle back, and we'll end it on this, but to circle back to, I think your question or my question to you of, do you remember that moment, or like what set you apart from other loan officers, or knew that you were going to do so well and mold your business around VA loans? We just heard it right there. You just nerded out on us and how passionate you are with just again, like, hey, it's the same VA loan, but understanding the guidelines and understanding what you're able to do with it and advise clients on that. It almost lets you be creative, if you will, with a veteran. There's so many options, right? And whether it's it's your family's first house and you just got married and you're in your young 20s and you're looking at settling down and starting your family in a different part of the world, or whatever it may be. Now you progress into where you're buying your forever home, and look what you can do with it, right? You can keep this home and have two VA loans at the same time and start an investment portfolio. You can use the net proceeds from this and just give an example of, like you just said, and maybe negotiate some seller concessions and have them put new stuff in for you before you even moved in, or buy you a golf cart, if you will, and not put 20% down and avoid taxes because you're moving into maybe you're a smaller home or whatever it may be at that part of your life. The amount of stuff you can do with a VA loan is just, it's wild to me, being in, I guess I would be considered a younger loan officer. It's wild to me to hear the negative stigma that is out there with VA loans, because I've never seen it. All I've seen is this side of the VA loans and how it is the best mortgage out there if you qualify for it, and how versatile it is and how fluid the guidelines are. And, just from a pricing standpoint, from a flexibility standpoint, I just never got it. And so it's good to hear from you. Like, maybe what it was 20, 30 years ago is certainly not what it is now.
Exactly.
Yeah.
Amen.
Awesome, Russ. Well, cool. This is a great conversation. Dude, I loved it. This was such a good conversation.
Again, it's super cool when you get to talk about how good a company we have, and then we get to be nerdy for a little bit and talk about VA loans that we love.
I was just sitting there listening, man. That was good. So awesome. Thanks so much for joining. And well, if you guys where can we follow you at? Social media? You got Instagram?
Social media, if you go to Russell the Mortgage Strategist, Facebook, Instagram, YouTube. I have a ton of playlists that I learned from a guy named Michael Sweigert. The bearded banker. It's really cool. And he gave me an idea and I ran with it. And so Russell the Mortgage Strategist. That's where I try to provide as much outside the box tips like we're talking about here today, they're all over the place in there.
Yeah. And you have some great content out there, especially for whether, like I just described, whether you're a first-time home buyer, whether you're looking at a VA loan, whether you're looking at DSCR, investment properties, anything. Russ has awesome content out there, so make sure you guys give him a follow. And definitely we'll post this video up there as well, this little podcast, and reach out with any questions you guys have. So I appreciate it, Russ. Thanks for joining.
Hey, I can't wait to do it again. Thanks, man.
We'll see you.
This is the standard. This is the work. This is the mindset behind the results.